Byron, good morning. It's great to have you on.
Great to be back. Thank you, Deeter.
So in what I just read, key there is if multiples stay the same as they are today. I wonder, Byron, if you see Adobe, for example, as a cautionary tale and that it reported late in the season and it did raise concerns, some concerns about Russia's invasion of Ukraine and European softness. Could we see that show up among more of these emerging cloud names in the earnings season that is about to kick off?
Well, as we've seen, the multiples in the sector have been hammered over the last 100 or so days. They've come from about a 25x run rate revenue multiple down to about a 10x multiple, 8 to 9x run rate, 12 to 13x forward. And that's just been a massive pullback, about 53% on average across the whole basket in the emerging cloud index. When we peel that apart, very little of that has been due to business performance. These companies continue to perform, they continue to deliver. This is very much a macro question related to inflation, interest rates, and a little bit of the geopolitical to the extent that may have some demand impact. I think of those factors, though, the actual business impact is lowest on the list. Certainly some companies like Adobe with international businesses will feel some exposure, possibly also some currency exposure. Yeah. However, it's much more the leading indicators around the macroeconomics elements and the inflation impact as that has to growth companies. People are looking at these hypergrowth businesses with future free cash flows, and they're doing the trade. And they're saying, I'm less patient. I'm less willing to wait for those cash flows. I want it now. And as a result, they're valuing current income and current cash flow. They're massively discounting these future values, even for businesses that are growing 30, 40, 50, 60% over extended periods of time.
Right. And that's not really, when you think about it, that long to get back to some of those peaks that we saw during the pandemic. And I know that, Byron, we've talked in the past about sort of this Amazon moment. Now could be a really good time to pick up some names that will even surpass those peaks. But what we talk about less and perhaps less fun is the Cisco moment, a stock that fell enormously during the dot-com bust and has continued to remain a very important company, but has never actually come back to that peak.
And that's the investor's actionable moment right now, which is think back on that dot-com situation of the companies where demand fundamentally eroded for a large number of those companies. And the Ciscos of the world, they just lost a customer base overnight versus the Amazons in 2002. That was one of those defining opportunities to buy a long-term, multi-decade platform company that was going to become a franchise of one of the two massive investable trends of the last 20 years, internet and mobile within tech. Cloud computing is that third, and we had that discussion. John asked a very specific question, and I want to be very direct with the answer. This right now is that Amazon moment for 2022. Cloud computing is that third massive wave of technology. It's a huge multi-trillion-dollar investable trend, and the multiples don't need to come back for the stocks to rise massively, and that's the core point. These embedded growth rates, the organic engines within these businesses are fantastic, and you can roll this forward and run flat multiples for the next several years, and you can still build back to those 52-week highs that we saw last year and well beyond because of the compounding of these business models.